Greg, what investments in a portfolio are good to maintain the long-term purchasing power of that portfolio?
Asset classes that have been able in the past to maintain purchasing power, and for good reason likely to be able to do so in the future, would be things such as stocks, real estate, perhaps commodities, gold. One of the reasons for this is that, for example, stocks. Businesses globally, when inflation exists, when the rising prices of their manufacturing costs, labor costs, production materials go up, they're generally able to increase prices of the products and widgets they sell to consumers so that the earnings of these businesses are not affected in a large way. And in a way, they're able to keep up with inflation as a result because they can pass these rising costs off to the consumers. Similarly, real estate investments are able to do something similar. If we owned apartment buildings, what we found is that over time, when inflation exists, the landlords of these buildings are able to raise rents with inflation and basically pass the rising inflation costs off to the tenants of the buildings. For these reasons, real estate and stocks tend to be good investments during rising inflationary environments. Unlike bonds, on the other hand, where the interest rates are quite modest and historically have not been able to surpass inflation because to some degree bonds really are a representation of what inflation actually is. Now, when we look back over the long term, we see this in the numbers. When we look at the equity markets over the long run, the returns of stocks have been something of just about 10 percentage points per year, whereas inflation has been closer to 3 percentage points per year. So there's been a spread of almost 7 percentage points per year over inflation investing in the stock market. And actually, when you look at the real estate market, the numbers are fairly similar. Another asset that investors could consider would be commodities, or gold, metals, food, natural resources. What we've seen over time is that these assets tend to keep up with inflation as well, because to some degree these things are a good representation of inflation. Generally, when we have short-term unexpected inflation, where inflation surprises us all, we see commodities holding up a little bit better than we see stocks and real estate over short periods. In the long run, we would expect businesses to earn better rates of return than natural resources, but as a diversifying asset as it relates to inflation, commodities and metals could be a good hedge in a portfolio for surprises in inflation direction.